Joining me now is Potomac Wealth Advisors President and founder Mark Avallone. It's a wall of worry. It's been there before. Markets keep going higher. Is there anything on the radar for you that should derail this market rally?
Well, we had the biggest market worry taken off the table at Jackson Hole, and that is the Federal Reserve. And Jerome Powell, who is the biggest driver of these markets, basically said, we will taper, but we're not going to tighten too tightly. So the biggest worry, the worries about a crash, those are kind of taken off the table. But it could be death by a dozen cuts here, especially when we look at the list that you mentioned and the impact of taxes, which I think hasn't been fully resonating with investors, how that's going to hit the bottom line and corporate earnings. These tax cuts are significant. I mean, the market rallied when we got the tax cuts a few years ago. Why not the reverse, or why not the same sentiments on the other side when there's talk of significant tax hikes, both for corporations and for individuals?
So we talk often about what's priced in the market, what's not priced in the market. It's obvious right now that over the last several months here, things have been priced in, positive news has been priced in, and yet the markets keep on pricing in more positive news. Just how much more positive news needs to come out for the market to keep going higher? What else is left?
Well, we got the positive news last quarter with those massive earnings gains, and they're going to be hard to repeat. So that's an expectation that I think we need to begin to manage a little better as investors. In terms of catalysts, I don't really see a heavy new catalyst coming in between now and year end. I think we are going to be in a holding pattern. I think the next big news is going to come out of DC, whether it's the size of an infrastructure bill, which had driven up, if you recall, that had driven up cyclicals and the values trade, the material stocks. It really rocked them to the upside. And now we're barely talking about an infrastructure bill other than maybe this $1 billion that was already passed. Agreed to, at least verbally, by the senators. So we're not seeing any major catalysts that are positive.
So I want to bring you back to a catalyst that a lot of folks are following right now, and that's this argument that deflation, or rather inflation, is here, that it's not just transitory. We heard ARK Invest Cathie Wood saying that the concern should be deflation, that prices are going to come down. Is there any kind of a view in your mind of how investors kind of position for this notion that there is developing a tug of war here between those people who fear inflation and those who say that prices are going to come down eventually?
Inflation is not going to be a permanent 1970s style fear for investors. I've been saying that for the entire year. And I think investors need to realize the biggest macro factors facing inflation are aging demographics, tremendous innovation, and the return of globalization. And those will suppress prices once we get through this supply shock and once we get through this reopening and the impacts that it has had on prices. The other point about inflation is everyone's saying, well, these wage gains aren't going away. That may be correct, but inflation is measured year over year, and we're not going to have the same wage gains in 2022 as we've had in 2021. So I don't see inflation as a big problem. I do think the Fed needs to taper, maybe not tighten. And I think any movement by the Fed is going to take some froth out of those long-dated tech stocks that don't have current cash flows. I think that's a risk for investors who are bidding up speculative, non-cash flowing tech. And that's something that concerns me as a money manager.